Hello, everyone. Tom Staub, CEO of Red Oak Development Group. Sorry, I've been out. I got COVID while in Hawaii and had to quarantine for a week or so. All is well, minus the fact that I can't taste or smell anything. That is absolutely terrible. I've been watching plenty of food videos, cheesesteaks and random street food. My brain must want to taste, but it just can't. So, anyways, today I want to talk about a few things. The first thing we're going to talk about here is what's happening in the real estate market by buyer type. And there's three types of buyers that I want to talk about. The first one will be entry or your first move up buyers. The second one will be the move up buyers or the luxury buyers. And then the empty nest active adult buyers, right? And there's so much noise right now in the market. We're trying to figure out, is there a crash coming? We saw some supply come up. Some of us thought there was some seasonality. People weren't focused on buying so much given the frenzy in the market. There's a lot of concepts that we were throwing out there, right? Mainly the concept was, well, we think there's a pullback because people were out enjoying their summer, beginning to travel, and we see that in the summer reports of travel. They're going to hotels, they're going to beaches, they're tired of the craziness of the real estate market. Therefore, they got fatigued and they're taking a step back. We knew that was going to happen. That tends to happen anyways in real estate. And we did see that. And we think it's going to continue into the fall. In the fall, we'll begin to see some refocus and reattention to the real estate market. And if you don't think I am accurate, well, I'm going to show you a few things. Now, what I'm showing on the screen now is by John Burns Consulting Company. And if you know me, you know I'm a big fan of Zonda and John Burns. They're two big gurus, actual gurus in real estate market. And what you see here is that in the entry level buyer, and think of it as like $300,000 to $500,000 range, or slightly a little more, the sentiment is still very strong. Right now, prices have got to a point where it's getting harder and harder, and I think there is some, influence, of self-fulfilling prophecy in the YouTube channels, in these gurus that are dying to see a crash so that they sound right. It's catching some people's eyes, but in general, people still want to buy homes. People still want to move up to a new home. There's a lot of cool things happening with these new construction homes that are coming out. I have a development. I'm building 50 homes, 20 minutes south of Austin. And the houses we're building, they're really nice for the price point, right? People want to get those homes, right? They want the new things. They want that extra space for the office. So there's desire to move up out of the first home. And of course, people and millennials want to start families. They're at that point in life. They want to have a home to do it. So there's still very strong demand in that segment. Now, again, the second segment is the second move up or the luxury buyers. So people who have made some wealth, probably in their 40s, they now want to go up into a nicer home. And you can see that they're doing very well with the stock market and their tech jobs and all that. And consistently, we're seeing very strong demand across that segment. Okay. The empty nest active adult, this is, everything in between. And again, you're seeing these people, want to buy the new amenities that come with the homes. They want to buy homes. The sentiment has remained very strong there all the way through August and a slight pullback in September. Now, this is very consistent with what we're seeing in the markets, right? I'm trying to buy a house an hour and 20 minutes north of Austin in a really good rental market up there. I have some 1031 exchanges that I have to take advantage of, and I'm getting outbid. Cash offers, most of them. Price points around the 220 range, which I'm a big fan of, and I'm getting just annihilated on 7 offers on different homes, not even close. So the market is very robust in the in that $200,000 to $400,000 range. We expect that to be the case. I can tell you all my developments that we're building, they are in that $400,000 to $600,000 range because I think that's where builders see the most safety, right? So there's that. Another thing that I want to focus on here is the migration, right? So there was fear that, this was going to be a quick wave from California, New York, and Chicago to these, the smile states, if you will, where the sun shines. And a lot of people thought there would be, a quick cliff on this and we'd go back to normal. What we're actually seeing is we're seeing an acceleration. This is just as of a week ago. You're seeing builders and local agents talk about who's buying what, right? And again, this is across a survey of 71 metros and 243 home builders. And what they're seeing is that 40% of the home builders are seeing either a small increase or a substantial increase in the amount of people that are relocating versus those that are not, right? So again, people are moving all around the country. This virtual office, this Zoom office is here to stay. And so, when people talk about submarkets or national averages, it's too cluttered right now. Generally, what we're seeing, and I'm going to show another chart here. I love the Redfin data, and I use a number of sources. The big one is Redfin data. It's free. And so let me pull it up here. And what you'll see, we'll click on single family residential. We're going to move this forward just to keep it easy. Now, these are just the big metros. Let's go from 2019 so you can really see a trend here. But you can see month supply, right? Still in the, generally speaking, in the 1 to 2 month range. Okay. Now, this is a 90-day rolling average. So a lot of times when you hear the month supply is being reported by the Fed, for example, in fact, if I go to the St. Louis Fed housing supply, it will show month supply seasonally adjusted. So its observation was a 6.2 month supply in the month of July. Now that obviously is not a rolling average like Redfin is. And again, 6 to 7 months is balanced. So that's fine. We're okay with 6 months. But generally, when you look at it over a 90-day average, we're still really short on supply. And so, we really have to get back up into the 2018 levels to get this back to that balancing act. So then this is really the thing that you're going to keep hearing. As long as the 10-year note is sub 3%, which it is 1.2 or 3% right now, as long as mortgage rates are below 6%, as long as COVID doesn't wipe us out, and as long as this supply-demand curve favors the sellers, you're gonna see price appreciation in these markets, and that's the story that we just got to focus on. I think that's our clues, and you can look at this any month, and as we start to see this accelerate back up to the 6 to 8 months range, it's time to reconsider buying any sort of real estate. Right? We don't see that happening for some time, and I think we're in really good condition overall, despite what all these gurus are talking about in the market. So. Time will tell. And by the way, September 25th, we have an event coming up, virtual event, September 25th, 10 a.m. Pacific. You can go to reiconference.com, register, a lot of good stuff there. So we'll be talking more about this here in about 2 weeks, and hope to see you all there. Thanks.